BTC bulls are positioned to win this week's $1 billion options expiry, but the market's post-FOMC reaction could alter their plans. Bitcoin's BTC price has been trading above $22,500 for 12 days. Of course, this situation can change even if Federal Reserve Chair Jerome Powell issues positive statements about the economy in today's post-FOMC presser. Even if the decision matches the market consensus, the post-meeting statement should be investors' primary area of focus. Specific areas to focus on would be clues for the next meeting in March. Troubling news for the largest stablecoin Tether, USDT, could also cause a meaningful impact after a Celsius bankruptcy examiner report showed that Tether's exposure eventually grew to over $2 billion in September 2021. However, it is unclear if Ifinex Tether's issuer suffered any losses. Ifinex CTO Paolo Ardoino denied exposure to Celsius and suggested that the examiner had mixed up prepositions in the report. Legendary portfolio manager Michael Burry, known for being one of the most vocal critics of the subprime mortgage crisis in 2007 to 2008, posted a short note on Twitter on February 1, suggesting that investors sell. While the message lacks a supporting thesis, one could conclude that Burry expects a meaningful correction in traditional markets. Considering the 40-day correlation between Bitcoin and the S&P 500 index at 75%, the odds of a BTC price retrace become evident. Consequently, this week's February 3, $1 billion BTC options expiry can go either way because bears can still flip the tables as the tide currently favors the bulls. The open interest for the February 3 options expiry is $1 billion, but the actual figure will be lower since bears were caught by surprise after the 9.6% rally between January 20 and January 21. The 1.61 call-to-put ratio reflects the imbalance between the $640 million call, buy, open interest and the $400 million put-sell options. If Bitcoin price remains above $23,000 at 8 a.m. Universal Time Coordinated on February 3, less than $7 million worth of these put-sell options will be available. This difference happens because the right to sell Bitcoin at $22,000 or $23,000 is useless if BTC trades above that level on expiry. Below are the three most likely scenarios based on the current price action. The number of options contracts available on February 3 for call, bull, and put, bear, instruments varies, depending on the expiry price. The imbalance favoring each side constitutes the theoretical profit. This crude estimate considers the call options used in bullish bets and the put options exclusively in neutral to bearish trades. Even so, this oversimplification disregards more complex investment strategies. For example, a trader could have sold a call option, effectively gaining negative exposure to Bitcoin above a specific price, but unfortunately, there's no easy way to estimate this effect. In essence, Bitcoin bears need to push the price below $22,000 on February 3 to flip the tables and secure a $165 million profit. But, for now, bulls are well positioned to profit from the BTC weekly options expiry and use the proceeds to further defend the $23,000 support. The views, thoughts and opinions expressed here are the author's alone and do not necessarily reflect or represent the views and opinions of Cointelegraph. This article does not contain investment advice or recommendations. Every investment and trading move involves risk, and readers should conduct their own research when making a decision.